Welcome everybody to another 144 Analytics video where we explain how to use the Fibonacci retracements. This one's going to be a short video dealing with one trend, and the reason we're doing it only with two markets here, and because sometimes the message gets really diluted by our videos being too long. So we want you to really grasp what we're dealing with. Now, there's hundreds of indicators on all your systems, and they work at some point, or they wouldn't be on your charting package. But in my 50 years as an analyst, I've found that the Fibonacci retracements are the simplest and yet most effective way of measuring the markets and knowing the trend and what to expect from these things. So we start here with the cattle. I took everything else off of this thing, and I just want you to see there's this low, this low, this low, this low, this low, this low. What do they all have in common, and how could you have said, okay, this is where the market should turn? So we'll start with two basic rules, and that's the 38% is the single most important retracement and a level we use for the golden rule. This rule being any market that's going to keep its current trend must hold 38%. As long as it does, the trend will continue, and it should make new highs, lows from that retracement. There are subsets to these as far as did it make that new high low, or what is the potential from those things. So here we have, you see all these things. Wouldn't it be nice to know what was happening at each of these lows? Well, here's what I'm going to show you right now. Here's our regular chart that we have. There we go. Now you can see here, we're just going to put the retracements on it for you just so you can see it real quickly. Here's the low of the contract. What's our first setback? That was that first low, 23%. Again, 23% is extremely strong. Weak markets will only go 23% back. This is typically a runaway market. So then we go to this next low. What is it? But 23% again back to here. Market continues. Now we get a bigger setback here. What does it do but come back to 38%? Again, keeping the trend intact, and new highs should follow. You see this kind of action here, and you're thinking, boy, this thing's done. But when you put the numbers on it, you know that it's not, and you know what the potential is after holding it. We go back to here. 38% again back to this low. What happens but a nice driving market higher. Then we look at in here, well above the 23%. Then you could even do another retracement back to a secondary low, and we look here and we can see it couldn't even make it to 38%, to the tightest low that you could retrace to. Now we move up into this area, and now you get a combination of these two. Not only was it 23% back to the low, but then again, let's get this right here. It was 38% back to this low and 23% back to this low. And you see, extremely strong markets holding 23%. Runaway markets, look at this market now. So we also like you to just see where these markets are hitting and resisting, and playing off of the Gann squares. They give us what to look for above and below when the markets have no retracements. So our next thing is we want you to look at another same trend, uptrend here. We're going to go to the gold. Now this goes back to, on the nearby chart, the continuation, this was 38% back to there. That was the start where this thing had its base from. Actually, going back further on the weekly chart, it was even way further back when this thing started and held 38% on a long-term chart. Now, as we take these and look at it from here, this low, we can see that what did the market hold but 23%, and off it goes, right? So again, what are we looking at? 38% to that, telling us the trend is still intact, and then the most vicious move higher yet. Now we look at this one here, and all the market could do was set back to 38%. Now, we just want you to understand these things. This is, are they going to hold these things every time? No, but when they do, you know what you can look for from them. Like I said, it's 50 years in this business doing this stuff. Never seen anything that you can use on a daily basis. You can take this down to an hourly chart, take it out to the weekly chart, take it to a yearly chart. Doesn't matter. All the rules and guidelines are exactly the same and can be used at every moment. Not, oh, once in a blue moon this thing sets up, or it's a Head and Shoulders that took a year to make. You know, you're dealing with something that's every day. Every day you know what to look for. So here you can see the market ended up turning at a 78.6% retracement. This is a whole nother thing, and we'll get into that and other things where you can see that when a market fails to make a new high, it can be the end of the trend, or at least go 78 back the other way. But again, we held that here. Then you just take a look at what the market did here. When it held at 38%, it went 78.6 again, came off 61.8. We just went 78.6 again of this range, and now we're at 78.6. Now we've got a big wedge building here, and if this level in here, we may even go the 78 quick thing, 78.6 retracements should send you 78.6 the other way, just as it did in here, and it still can here send it down to here if this level gets violated. But you can see there's longer term levels way below this. So this level holds, you're looking at another drive higher on here, and if not, you know, you have these retracements that are underneath. So I hope this helps you in making it short and to the point, and that any market that has a good trend is going to stay above 38% or 23%. In any market that's very negative will stay below 38%, 23. A lot of that's happening in the grains. They can't you know, get up to help themselves at all, and they can keep running into retracements above. So hopefully this helps you. We'd love for you to become a subscriber to our channel here. Give us a thumbs up. And if you trade the grains and livestock, become a premium member. And if you trade gold, oil, S&P, and the Bitcoin, you can get a free update, weekly update by signing up on the page here too. So until next time, good luck.